You know what I might do today? I might go back and rewatch the in the 2022 playlist, the video where he breaks down intermediate highs and like short-term highs. I feel like that one I remember. I watched it twice, but that was one of those videos where if you just go back, no matter how many times you watch it, you'll see something new. And if you watch it, if you like gain some more experience and then rewatch it again, you'll see something again. You'll see something new. I say that because I'm noting when he tweeted this. It was right after this high was put in place. So right here we have an intermediate term high because it has a swing, a short-term swing to the left and to the right of it here. And then we take it again and make a new intermediate term high here because it has a short-term high and a short-term swing high to the next of it. So this is a new intermediate term high after taking. So I want to go back and watch that video because I'm noting how when he tweeted this and what structure was doing at the time. It's right after we put in a new intermediate term high after taking a previous intermediate term high. I'm guessing on the 15-minute or at the 15-second, this is probably a really big market maker sell model. So in theory, what I'm guessing is we shouldn't come up and go any higher than this high before we take sell side. And this is the way that I look at price. Like I said, don't try too hard to make sense of nonsense. But when you are seeing consolidation like this, I'm not really, what my eye is gravitating to is the swings. The swing high here, swing high here, swing high here, swing high here. And noting kind of the order they're in. And I'm gonna have to go back and watch that video so I can communicate this a lot better. But the order in which a buy side's intermediate swing high might be taken compared to a sell side. And then, so I think this is actually a long-term swing high, and a long term is one with two intermediate terms next to it. This was right here our long term, our previous long term. Well, it still is, but it's not the highest one now. This was a long term high. So again, intermediate term high has a short term high and a short term high next to it. A long term high has an intermediate term and an intermediate term next to it. This is intermediate term because it has a short term and a short term. Short term, intermediate, 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 long. So I'm predicting that price it will take this level, but it will not reverse past these highs before taking this level. Now we could come and take this level and turn around, but right now our if-then statements are, if this does that, if this does that, then I'll do this down to here. I'll stay on just to watch this play out. I want to see if my analysis on that was correct. Do we come up and take these highs prior to taking this low? I saw another. I only use Twitter just to follow ICT's tweets, but I followed just a few other people that I thought did good analysis and smart money concepts. And I think the guy with the Twitter handle ICT Concepts is, I think he kind of hosts like a little community. But he also just tweeted something that was basically saying, if you C can get destroyed in this, because it is seek and destroy. So there's a little bit of validation on our part. Sell side. Appreciate you guys if you're still here with me. Just watching price. This is trading. Trading is monotonous. It is boring. So I'm noticing how this was that swing high. These were the two swings that I wanted to study as places where a stop loss, or like it wouldn't, I don't want to say stop loss, it wouldn't make sense for price to go back and above. Look at that. Went just a tick over the consequent encroachment of that wick, and that's when it decided to turn over. I'm curious if we now send it to that south side. Yeah. He said study, not trade it. Remember. In hindsight, you can still get that FOMO. It's, oh, that would have been a good place to enter. But I talked in the video yesterday about when you burn yourself enough times, you learn. I'll keep that up. Oh, is it perfectly to the tick? Did I have it placed wrong? Looks like it's just over. Again, so long-term swing high, intermediate term high, because they have short-term and short-term next to them. When this high took this high, it became a long-term high, or because, so this was our long-term high over here, way on the 5 minute, and then these two took it. And then remember, this is a rolling thing, so we took it here, so then this becomes a child, like in the terms of like hierarchy structure, like this is the parent now, these are the childs. It's still working its way out, but then you can see it form here because now we have the intermediate, so it's an intermediate term because we have the two short terms. And then this one finally takes it. This becomes child, this becomes parent in this structure. And now you can see it play out. We've now made the new long-term high. These are intermediate terms. And then price. And all this, while this has happened, no sell side's been really taken in terms of liquidity. Or the context, we're at the bottom of a pretty significant level on NASDAQ. This is a weekly fair value gap that yesterday's daily candle closed below, and today's candle came up and is touching the bottom of it, treating it like an inversion. You see this market structure at the bottom of it. Meanwhile, we did get this one candle body close above this, but you can see it sharply reject it afterwards. Here's where ICT called out. I would love to see him if he did a breakdown. I believe he specifically called it out here because it was right after this high was placed. Boom. So that's what I was saying earlier about, trying to sharpen my skills on the 1 minute, because and he says this too. He's like, you can absolutely read down to the 15-second candle on everything price is doing, because according to him, it's very algorithmic. So this is probably one of those. He called out the 15 seconds. So this is one of those examples where he's reading algorithmic price action on the 15-second, and we're watching it on the 1 minute place structure like this. So if you think of it in relation to, so he's looking at the 15-second, we're reading the 1 minute. That's almost like when you read the 1 minute chart in terms of, and you're reading the 15-minute chart. I know the ratios aren't perfect, but I'm going to think about it like, that's how I'm going to view it. But the point is still correctly. It's, smaller time frame fractals fit into higher time frame fractals. So you can read price on the 15-minute and use that as predicting the daily. And you can work your way down. But also notice how, actually, I don't agree with what I just said. I'm not going to say it. What's the dollar doing while all this was happening? Was going higher. But again, so I do think even the fact that he was reading the 15 second is a testament to how sloppy this 1 minute price was. He had to go down to the 15 second to start reading stuff because it was like on the 1 minute it was too irrational. So you had to drop down to get more precise so you can predict smaller runs. So that's why, I mean, I don't think it would be smart to try and, because it looks like the next sell side is this new day opening gap high, but I wouldn't even try and target that because, I mean, think about it. If we targeted this low on a 15-second narrative while we're looking at the 1 minute, in the 15-second, this is a freaking run. This is a big run on the 15-second. And if price is going to continue to print like that, you know, where it's irrational on the 5 minute, irrational on the 1 minute, kind of, I was able to, you know, kind of explain to you guys what was happening here. But in relation to this move on this analysis was kind of based off the 15-second and the 1 minute. This is a large move. So I wouldn't expect too much of continuation. We could very well get it. But again, if we just did for example, a 15-second analysis, don't be like, oh, well, now on the 15 minute, it's going to run. It's too big of a jump in time frames, whereas you're like you can do the 1 minute to the 5 minute to the 15 minute because those are all close enough where the narrative and market structure, they're kind of telling similar stories. But if you try and compare the 15-second to the 15 minute, you know, there could be 100 stories in that 15-second that all are actually part of just one story on the 15 minute. They're too far apart. There's too many fractals. If we were to continue lower, I wouldn't want to see it get above that. That motherfucker took a trade on the 15-second. Yeah, so he entered. Looks like he entered right where that consequent encroachment level we had measured out was. Yeah. I think so. It's kind of hard to read from the picture he posted, but he entered at 14,345. 14,345. So that is in between right here. yeah, so just goes to show what I just said. I wouldn't think it would have been safe to try and short down to that new day opening gap. Anyways, okay, so, oh, now I'm seeing the comments. Hey, appreciate it, guys. Again, if you're still here, Aldolfo and Column, I don't want this channel to be too much of learning. I mean, I kind of guess I do reiterate and teach the concepts just because I explain the trading, but I do think that if you want to learn to the fullest extent and most accurately, you should go and watch the videos from the guy who made the concepts, because there could be times where I'm wrong. Like everything I just said, I like to think that I had a pretty good understanding of what just happened, but I would hate to lead you astray. But if you are enjoying it, I hate saying this. It sounds really corny. If you could like the video, because I do notice, like, when I look back on the videos, the way I do see how the algorithm pushes it differently depending on how many people like it. And I thought this was a good one. If you also thought it was a good one, I would appreciate that. Okay, but I'm gonna get off because I think we saw this play out. I don't want to wait. I'm definitely not trading. Let me see what ES did. You can tell I like doing this. It's hard to peel me away. Damn, maybe I will start on days when I'm like I know I'm probably not gonna take a trade. I'll start tape reading NASDAQ, because NASDAQ is it just delivers price so much cleaner, and it like builds a better narrative. Whereas I think that, I mean, I only saw that, to be fair. I only was able to pick up on that whole breakdown I just gave you because he tweeted that sell side level. And I was trying to figure out, like, what the fuck is he seeing? So that's, I will say that, but I don't even think I could have read that on ES. It would have been the long-term high. Yeah, it's that narrative fits a lot better on NASDAQ, because what I said, we're above, we just put in a new long-term high on the 5-minute, took a significant high on the 5, the 15. We're coming up on the bottom of this significant level, this weekly fair value gap. So with this price structure at this location and at this time, that feeds a lot better to expecting sell side delivery than what I think ES showed. I mean, it delivered on ES, but if you can see on NASDAQ, it came back right up to the consequent encroachment of this intermediate term high. Whereas on ES, it didn't come up to consequent encroachment. It stopped at 25%. And I think it stopped at a level that was valid. It's one of those things where, you know, it just because it goes past 50% doesn't mean the narrative is invalid. I think if it went higher, like if we wicked above it, then I would have been like, I think that would have invalidated the narrative, but it didn't wick above it. So that's like this like hard gray area where, you know, you need to get accustomed to knowing what is allowable and what isn't allowable. So, and then what's ideal and what's not ideal. So closing above 50%, it's allowable. It's not ideal, but it's allowable. But having NASDAQ go to 50% to the tick, that's ideal. And NASDAQ seems to be printing price a lot like that. I mean, ES has been good, I think, most of October. I've had a pretty good October in reading price. But on their NASDAQ just always seems to be a little more accurate. But yeah, the narrative did play out on ES. It just wasn't as obvious because it wasn't like we were doing it at a high on the 5 minute. So long-term high, intermediate. This is intermediate because it has a short term and a short term. Intermediate. So we took, sorry. No, this isn't intermediate. Yeah, see, it's a little harder. So this 15-second market maker sell model seemed to have began, and this is all in the context of the 15-second chart, right around here. Because I say that because we were making lower highs and lower lows, so we're in this downtrend. And it was this run that broke that downtrend by making a higher high. So I'm guessing this was kind of like the original accumulation on the 15-second. And then we came up, and then this is the market maker sell model, which delivered below the original accumulation. So I didn't even want to consider this swing high in that analysis. But yeah, so I have the long term, intermediate, coming up. Wonder. So okay, it repriced to the intermediate term. So that's another reason why I'm gonna want to go back and watch that video for a third time, because that's one of those things that, you know, you could easily skip over, and like he might not even explicitly say it, but you can see him do it. Since this isn't an intermediate term high, when we see this when we're expecting a retracement, should we only measure out should we measure out the intermediate term one over this one in terms of wicks? Because this wick's bigger and it's closer. So that's why I initially gravitated towards this wick. But this is an intermediate term. This is an intermediate high, whereas this is not an intermediate term high. This is not an intermediate term high because it has a swing high to the left of it. So I'm guessing price algorithmically came up and respected this wick instead of this wick because of that hierarchy. This is the intermediate, and this is not. On the 1 minute or the 5 minute, you could call this kind of got like a breaker structure happening It's even here on the 15-minute, but we'd have to come all the way back up here for me to want to trade that, which I don't know if we will. Okay, now I'm going to get off. I will not be on in the afternoon. I'm excited to get some, maybe take a break from trading over the weekend, and then we'll get back to it on Monday. I'm hoping, fingers crossed, going back to the dollar, we'll take a look at the dollar. Because earlier in the video I was explaining how I think the dollar, where the dollar closes today, will be tipping its hat to price action next week. So I would like to see the dollar close above consequent encroachment of this daily fair value gap. I think if it doesn't and it closes in the bottom half, that shows that this fair value gap, for lack of a better term, is weak, and we could just kind of range. We could stay in it longer. We could wick down into this, but I would prefer to see signs that it looks like this is a strong fair value gap in the sense that it wants to leave it. So a sign that would indicate that it is in a hurry to leave it is where this candle body closes. This candle body closes in, say, the top 25%, then we could expect it to leave sooner within the next few candles. We want it to leave this fair value gap because we want it to continue taking buy side. So it did take buy side right here and then reversed. I think if we start to close in the bottom portions of this fair value gap after taking this high, that wouldn't be too good. But enjoy your weekend. We'll see what the dollar wants to do next week. Hopefully it's good for trading. And bye-bye. Bye-bye, God.